Hello, everybody. Good morning, good afternoon, depending on where you are. I'm Sean McLaughlin, Options Sean on Twitter X. This is the All-Star Options Jam session for November 30th, 2023. We didn't have one last week due to the Thanksgiving holiday. Didn't really have much to talk about last week anyway, so hope you didn't miss it. I enjoyed taking the day off. Anyway, this is the jam session where we review some of the open positions that I've got on that I've shared with All-Star Options subscribers. If you're unfamiliar with what All-Star Options is, we put out trade plans 2 to 3 times a week based on the All-Star Charts research, stock ideas that the All-Star Charts research team puts out. We show you how to trade those ideas using options if that's your jam, so to speak. And we put out trade plans, why we're getting in it, how we're getting in it, what strategy we're using, where we're taking profits, where our stop losses, where our exits are, all that stuff laid out in every trade plan that we put out. That's what All-Star Options is. But before we get into a review of any action we've had in the last since we last spoke, I have to drop the old disclaimer that everything we discuss here is for educational purposes only. Everything we do here is, or I'm showing you what I'm doing with my money, and hopefully you learn something from seeing me work through my process. So as we like to start these sessions every week, as we like to just kind of do a little high level view of the broader market. And for me, the broader market that I track is the S&P 500. I know JC thinks the Dow 30 is the Dow Jones Industrial Average is the most important index in the world. I'm not going to argue with that, but S&P 500 is what I track. And as you can see, man, there's been no pullback off of that October lows, the end of October when the bears were screaming that the world was ending. The rally we've seen off those lows has been incredibly strong. There's been really no pullback at all. I'm not so sure there will be one. I've been saying for weeks now that the pain trade is higher, and it still feels like the pain trade is higher. But as you can see here, we've rallied where we've kind of stalled for the last 2, 3, 4 days. Nothing to sound the alarm bells on. I mean, for me, I feel like these summertime highs are a foregone conclusion that we're going to rip higher through there at some point before the end of the year. But I could be wrong. I've been wrong before. Meanwhile, notably, volatility index had its lowest, traded at its lowest levels this week, lowest levels that we've seen in the last 3-4 years. That's not insignificant, but it really just reflects the fact that a lot of the fear has come out of the market. A lot of options premiums have been sucked out of the market. You guys know, if you've been tuning in to me and listening to me for the last few months, that for many months up until about 3 weeks ago, all I was wanting to do was sell premium, sell delta neutral premium in option spreads, because volatility was a little bit higher, not really all that high, but really the market was just going sideways or slightly down, and that just felt like the best trade. Well, with volatility index making new lows, I am not in the market for delta neutral trades, at least in stocks. Of course, I still do some index ETFs, delta neutral trades, and some other strategies. But for stocks, like, if I'm going to looking for a trade in a high flying big cap stock, nope, not looking to do a delta neutral credit spread. That's for sure. Not in this environment. Speaking of those types of trades, here's one that we had put on a while back, and it finally just came off. Procter & Gamble. This might have been one of the last delta neutral trades that we put on. We put it on back on November 2nd. I believe this was a strangle. Sorry, I got to check my notes. Yeah, it was a short strangle. We were short the December options, the 140 puts and the 155 calls. We sold them for $1.80 back on November 2nd, and we closed them at our profit target, bought them back at 90 cents back on the 20th. So this was last week before Thanksgiving. So we were out of, I believe that was our last delta neutral trade that we had on the books. And most of them that we put on, not all of them, but most of the ones we put on over the previous 3 months did well, did what they were supposed to do. Palo Alto Networks, ticker PANW. This is one we put on back on June 2nd. We bought the January 250 calls. Boy, it looked like we were going to get stopped out this summer. Got real close to our stop loss at the time, was right around the bottom of this candle, but it didn't quite get there. And we held on, and we've been rewarded. I believe one of these was an earnings gap, maybe both of them earnings gaps. And this week, finally, we're getting some real follow through to new levels in Palo Alto. And when we put this trade on back on June 2nd, the trade plan was that we would sell half of our position when the value of the calls doubled. And we did that. We paid $14 for our calls back on June 2nd. And on the 28th, which was 2 days ago, we were able to sell half of them for 28 bucks. Now we're free riding on the rest of the position. Now we're starting to run out of time. We have January expiration, so we don't have a whole lot of time left for this move to happen, although I like the way it's moving right now. But now that we've taken half off, we can't lose in the trade, right? So whatever we sell the remaining half of the position, whatever we get for those calls, that's pure profit, right? Because we've already taken out our original risk capital. That said, I've now put in a stop at 250. It's not I don't have a working order out there, but 250 is the level. If we see a closing price below 250 at any time between now and January expiration, that will be a clear signal to me that the trend is over, at least in the short term, and we're running out of time. And below 250 means our calls are out of the money. So I'm just going to sell them for whatever I can get. Again, it'll be a profit. Obviously not the kind of profit we want if we're selling at 250 as opposed to selling right now. But hey, I like where we're at. We're in a can't lose situation on a stock that's breaking higher right now. It's a good place to be. So we're holding the rest of our Palo Alto. We'll revisit again on January 1st, or first jam session of January, and see where we're at. If we're still in the money, if our calls are still in the money at that point, then we'll start aggressively trailing a stop. Speaking of aggressively trailing a stop, we're going to start doing that in DraftKings. Here's another position. These are December options that we have on. DraftKings we got into back on June 28th. We bought the December 35 calls, and we paid $1.40 for them. Well, this one, it had some fits and starts, but now it's finally starting to go our way. We have not taken half in this one. The trade plan with this trade was kind of like an all or nothing trade. This thing's either going to work or it's not. And right now it's starting to work. It's not a huge winner for us. Again, we're only long the 35 calls that expire in December. So they're only about $3 in the money right now. But yes, we are definitely sitting on profits. But I'm going to start trailing a stop now. I'm cheating, getting ahead of it a little bit. But these are December expiration options, and we're long the 35 strike. So from now until expiration, I'm going to be trailing a 3 to 5 day low trailing stop on this position. What does that mean? That means that whatever the previous 3 to 5 days, right? That's a rolling thing, of course. But whatever the low is of the previous 3 to 5 days, I'm using discretion. Okay, it's not scientific, but whatever that low is between over the last 3 to 5 days, that's the level I'm going to use as my stop loss. And hopefully this thing just keeps going higher, and hopefully it doesn't even trip that. And we just, maybe we cover this thing at $50. That would be great. And that would be a win. So right now we're winning in DraftKings. Not huge, but if the recent low holds, which I believe this was the low set on Monday intraday, as long as that low holds, we're going to make some money in this trade. So DraftKings, December 35 calls. We're starting to tighten up our stops on that one. Okay, speaking of updated stops, we already talked about the Palo Alto, moved our stop to 250. Okay, so we could skip that. Steel Dynamics. So this is a trade that's almost at our profit target. This is a trade we're long, a January 100-130 call spread. This chart's a little out of date. Real time right now, STLD is trading at 118, so it's higher than what this shows here. We're trying to sell this spread. It's a $30 wide spread, right? We're long the 100 calls, short the 130 calls. We're looking to sell this spread for $20. And if Steel Dynamics gets to 120 or a little bit above, then we're going to get pretty close to hitting our profit target. So we have a resting order out there right now to sell this whole spread at $20. That was our trade plan from day one when we got into this trade. We got into this trade back on June 12th. So we're almost there, hanging tight. These are January options, but for now, in case our stop doesn't, or our profit target does not get hit, I have raised our stop to 107, which is just below the November lows. So hopefully this low never even comes into play. But if it does, we will exit the position at 107 or any break of 107 and walk away protecting whatever's left of the premium in that trade. But hey, we're looking good right now. We paid 10 bucks for this spread. If we can get out for 20, we've doubled our money, and that's the plan. Getting close. All right, another stop we've raised is Peabody Energy, ticker BTU. We are long the January 25 calls we got into back on July 21st. This trade's not really working for us. In fact, it's not working at all. We're currently sitting on a losing position. And I've raised our stop to 22. Now, if we get to 22, the calls probably won't have much premium left in them anyway, but they might, and whatever's there, we'll take it and take the trade off the books. But hopefully this level holds and this thing moves a little higher. Again, we're long the 25 calls. Hope to see this thing follow through into January, but come January 1st, if we're still below 25, we'll just sell them for whatever they're worth because we've got theta really working against us at that point, and we will be out of BTU. All right, Adobe. Here's a trade. We've got a risk reversal on in Adobe. We are long the June options. We shorted the 460 puts and bought the 700 calls. We did it for a small credit, a net credit of $1. All right, this trade's going our way. This is good. When I put the trade on initially, we had a stop loss at 450 at the strike of the short puts, but we're moving the stop loss up now. We're going to move the stop loss level up to 550. It doesn't show very clearly on this chart, but I chose that 550 level. That's the 50-day moving average of Adobe. And so if Adobe comes back to 550, I'm looking to close this trade and take my profit. So just keep that in mind. Actually, if we get to the 550, we probably won't have a profit, but we won't have much of a loss either. Because again, we're long the 700 strike calls, which are still way out of the money, but we're short the 450 puts. It might be a net wash if we get out at 550, which is fine. We'll take it. But I just wanted to let you guys know 550 is now the level of interest for me in Adobe. If we break 550, I'm out of that trade. And the next, I believe this is the last stop that we've updated. Yes, coin. This is a trade we got into fairly recently. We got into this trade on November 10th. I apologize if some of these trade information is not on these charts. I got to talk to my guy, make sure these get on next time. But we are along the March 60 calls. No, that's not right. Sorry, I'm looking at the wrong data here. We're along the April 100-150 call spread. All right. We paid 11 bucks for it back on November 10th. We're currently sitting in some nice profits right now. This is a trade that I classified as a hard trade. And right now the hard trade is working. Hard trades across the board are working right now. They won't continue. They won't all work. And some of them will reverse hard. I have no doubt about it. Coin might be one of them. And with that in mind, because of that, I've raised my stop to 110 in coin. And if it comes back down to 110, we'll probably get out of this trade for a scratch or close to it, which is fine. We paid $11 for this spread. Again, we're long the April 100 calls and short the 150 calls. We paid 11 bucks for it. So if we come back down to 110, the spread will probably be worth right around 11 bucks. So we'll get out for a scratch. But if it continues higher, we're looking to take profits of this thing. I believe we have a profit target at 160. We get up to 160, that's where we're going to take our profits in this trade. We'll see, it might get there. So again, Coinbase, stop 110. That's where we're at on that. All right, for the rest of this, these are new trades we've entered since we last spoke over the last 2 weeks. We've got 4 of them. If you want all the details of all of these trades, you can find them at allstarcharts.com. Go to the members section, go to the options section, and you can find all the detailed trade plans, why we got in, what strategy we used, where we're taking profits, where we're getting out, where our stop loss level is. All that stuff can be found in our detailed trade plans. If you don't have access to that, please shoot us an email, info@allstarcharts, and we'll start getting you hooked up. We also a live or a real-time chat community for All-Star Options subscribers, so you could always reach me and we could talk about trades in there as well with not only me but everyone in the community. So anyway, next gen is a trade we got into on November 17th. IBM we got into on November 20th. Amazon we got into on November 22nd. And finally, Lindy, is it Lind or Lindy? I'm not sure. Got into this on November 27th. And also, I don't have a net chart here. I apologize. We got into net yesterday. Talked about it on the morning show this morning. But all these trades, I mean, I'm not giving away the farm here, but they're all bullish bets. We're long all these trades. We got into each of them in different ways and different strategies to play each one of them. But those are the trades we got into since we last spoke. Again, you can find all those details on the website, allstarcharts.com. Well, thanks for being here, everybody. If you have any questions about any of these trades that we discussed, anything that happened here, or about All-Star options in general, or if you just want to talk about football, whatever, shoot me an email, info@allstarcharts.com or Sean@allstarcharts.com. Either one gets to me. Hope you guys have a great rest of your week. It's almost there. We're almost to the end of the year. We almost made it. Hang in there. All right, guys, I'll talk to you again next week. Take care.